Welcome to the Diary of a High Net Worth Investor podcast with me, Graham Rowan, founder of the Inside Investor Club and chief coach on the 8-figure journey, where we use private equity to build the lifestyle you want today and a legacy that will make a real impact. You can learn more at 8figuremasterclass.com. Welcome back to Diary of a High Net Worth Investor. John Donne famously said, "No man is an island." Well, my guest today seems to have a thing about islands. Early in his career, he spent time working at a scientific research station in the remote Galapagos Islands before making his home in the slightly less remote Channel Island of Sark and managing one investment fund based in Guernsey and another in Malta. I call him the Sherlock Holmes of the public markets because he travels the length and breadth of the planet looking for special situations where patient or adventurous investors can find hidden value. The platform through which he shares his research is called Undervalued Shares, and he's recently launched a community of investors with what I suspect is the slightly ironic title of Poor Millionaires. His name is Swen Lorenz. Sven, welcome to the show.
Hi, Graham. That's an amazing introduction. Thank you so much. Great to be here.
Now, look, before we dive into all this investment-related stuff, and without going all the way back to your mother's womb, I'd like to know a bit more about your early life in Germany and how you eventually end up talking to a bunch of penguins in the Galapagos Islands.
So when I was in high school, I picked up some business magazines that my dad was reading, and they contained one stock tip a month summarized on one page. And reading about that got me interested in the stock market. And even though I was only 15, my parents allowed me to use some of the money I had saved from working summer jobs to invest into one particular stock. And that went up by about 30% in a couple of months. So I felt like I had just received money, as a gift from heaven. And I was hooked from that moment. I subsequently started reading books about it, and I even occasionally skipped high school to go to shareholders meetings where I asked questions, and that led to a journalist noticing me. So he offered me a freelance position, and then from there, things just developed in a certain direction. I never planned it like that. I just embraced the opportunities that came my way, and the stock market has been pretty good when it came to, offering me all sorts of opportunities.
Okay, so shades of the kind of Warren Buffett background there, I think. But how did this diversion to the Galapagos Islands come about?
Well, that was slightly later in my life, in my early 30s. So you mentioned I'm traveling the globe looking for interesting investments. Occasionally, I also treat myself to what I call fun investments, and more for fun than as a serious investment. I had purchased a piece of land in the Galapagos Islands over the telephone without ever having been. And I did this being fully aware that this could be a fraud and I could lose my entire money. I didn't think it was a fraud, but I went to it with my eyes wide open. I bought it, and I then traveled to the Galapagos Islands to check whether I actually owned this piece of land. And I did. And I even ended up building a house there eventually. And somewhere along the way, I helped fund a new school, a vocational school in the Galapagos Islands as a charity project that went really well. And then there was a scientific research station that had ongoing financial problems, and they asked me to join their board. And after I joined the board of trustees, I ended up staging a bit of a boardroom coup, and not that I had actually planned on doing so, but I ended up becoming the interim CEO because there was no one else to run it. And after 3 months of being the interim CEO, I said, "This is so much fun. If you guys want to keep me for a while, I'd be happy to sign a contract." So I stayed for 3.5 years and turned around a scientific research station with 150 staff. It was great fun, but very much not a financial project. It was just basically charity and doing something I was very passionate about.
Interesting. And to bring that story full circle, I recently joined one of your webinars from the Galapagos Islands, and I think you were saying that it was only possible thanks to Elon Musk and Starlink giving you some broadband.
Yes, exactly. So when I was living there, which was 2010 to 2014, the research station paid $4,000 a month for its internet connection, which had less bandwidth than your average at-home internet connection in the UK would have had. And the islands have always been pretty badly connected. And then along came Starlink, and that changed everything. And now you can be in the Galapagos and do a high resolution video call, and no one notices that you're even remote. So the world is truly changing with this technology. And that was just a nice little demo case for that.
Yeah, I imagine they'll be offering a digital nomad visa there soon.
Probably not quite, but you could. Yeah, you could if you wanted to.
So we go back a little bit before that. You'd already started, as you say, wandering around looking for investments, and you even wrote some books, I think, in the German language, which become something of a kind of a cult collector's item.
Yes. So in 2006, a German publisher for finance books convinced me that I should write a book about traveling the world and finding interesting investments along the way. And I did that, and it did sell quite well, and it had its following. I subsequently wrote a second one. I have to say, in retrospective, I wrote the second one too soon. And I think the first one is a much better one. But in any case, I will eventually get back to writing another book or two or three. But so far, I only did it in German. And in terms of engaging your audience and having something very tangible that you can be proud about, writing a book is something that, I actually don't need to convince you of that. I think just looking at the background of your bookshelf and knowing the books that you've written, I think we're of the same mindset here.
Yes, but also I'm just thinking that you perhaps can reprise what the other great investor Jim Rogers did. He went around the world once on his motorbike and then again on a kind of adapted Mercedes, and just looking for interesting opportunities all around the place. Do you fancy perhaps doing a world tour and writing a book about that?
I sort of do that on an ongoing basis. So I travel pretty much every month, and it's not that I go out there specifically looking for investments, but I think I have a pretty solid network of people, and I like meeting them in person when I travel. And I usually get one or two good investment ideas that I can take home and present to my readers as well from traveling. Now, do you absolutely have to hit the road to find good investment ideas? No, we've got the internet nowadays, and there are all sorts of other ways, such as your events, for example. But it's certainly an interesting way. It helps me to find ideas that I believe are original, that you couldn't easily find elsewhere. And on top of that, it's also a fun way to see the rest of the world and, go on a little adventure.
No, absolutely. Just when you wrote those first books, I mean, I'm just thinking the timing of that was just before the great financial crisis. So, what kind of things were you recommending at that time, and how well did they survive the upheavals of 2008?
Oh, good question. It's so long ago. Two ideas come to my mind right away. One was Jardine Matheson in Asia, the family holding that has played a very important role in building up Hong Kong to what it is nowadays. I think they recently went private, and off the top of my head, I think that did pretty well. Another one I featured was a tiny bank in the Isle of Man, listed on the London stock market and connected to a well-known British billionaire, and that did pretty badly during the financial crisis and then never recovered, sadly. So it was definitely a bit of a mixture, as
Okay.
inevitably it always is.
Yeah, that wouldn't be the same person that might be involved with the Master Investor show, would it?
Could very well be the same person, yes.
Because I was surprised. I always learn more about people when I research ahead of these interviews, and I didn't realize you'd actually been running that event for a while.
Yes, so the owner of that event, Jim Mellon, he called me in when the company that was running it had pretty much collapsed. There was a nasty insolvency case with all sorts of other problems, not just financial. And he was the majority, or at least the biggest shareholder of it. And he needed someone to fix this thing back together. And I did that, and together with a very good team. So certainly didn't do it by myself. And yes, I was running the Master Investor Show, which was great fun at the time, because yet again, it helped me to build a community, meet lots of interesting people, private investors primarily. I'm a big fan of the private investor because they are more flexible, they're more open-minded. I find dealing with institutions is a slow-moving and pretty boring affair nowadays. So I prefer self-made entrepreneurs and people who are making their own decisions.
Absolutely, and I admit that the Master Investor Show has become one of my kind of prime go-to events. I'm speaking on the thought leadership stage this year. We're recording this in February. The event's at the end of March, and I always find I just meet some really interesting people and potentially some investment opportunities there.
Yes, and what it also shows is that there are many private investors out there who are managing their own investments. They're looking for alpha, they're looking for above average returns because, as I always describe them, they already have made a couple of millions, but they now want to reach the next stage. And it's always, literally the guy sort of above you who you want to catch up with. If you have 2 million, you want to get to 5 million. If you've got 5 million, you want to get to 10, 10 to 20, da, da, da. And these people struggle to find anyone to engage with who is a peer, first of all, doesn't want to constantly sell them something, someone they can respect. And that basically means other private investors and entrepreneurs who've also made their own money and are managing their own money. And quite importantly, who simply have access to good ideas and deals that they can latch onto or swap notes about. And I think this is the community that you've been building, I've been building, the Master Investor Show has built that. There's, I think, a real change in sentiment among investors, private investors, who are realizing that if you want to get to that next level, then just having a Vanguard fund or going to your high street bank is not going to get you there. Equally, you're not yet welcome at the big hedge funds in Mayfair because the checks you need to write to get into that club, they're much bigger. So what do? You just, you connect with your peers and you help each other.
Absolutely. No, I think we do serve a very similar group of people, and they've been typically very badly served by the traditional financial services industry, not just in terms of performance, but in terms of customer service, information, whatever. So I think we're pushing against an open door there.
Can I add something here? And what you just said, they haven't been particularly well served. I would voice that in a even stronger way. I would say that they're looked down upon and they're not particularly welcome at many institutions. So I speak at a lot of sort of more corporate events, and I always speak about my passion for working with private investors and small family offices. And I notice how I am somewhat looked down upon because, oh, these poor people who write checks of only $250,000 or $500,000. And all I can say is, dude, they may be gardeners or running other sort of manual labor business, and they may not go to a fancy office like you, but they usually have more money than your typical corporate employee who's at these finance conferences. So I think who looks down on whom is very much up to debate here, but certainly the financial industry is not good at serving that clientele.
No, and one of the things that I love about that group of people is so many of them are self-made entrepreneurs of one sort or another, who for me are the lifeblood of an economy. And so, I love to see that they've been successful in business. And then once they've got that success, they've got some liquidity, they're looking for how they can move, where do they invest it? And some go ultra cautious and they just want to be in bricks and mortar and so on. But the ones that are prepared to open their mind a little bit and look at some of these amazing opportunities can really transform that level of wealth for themselves and also obviously for the next generation. So, it's certainly, it's a niche I'm very comfortable in, and I know you serve them well too. So obviously one of your core activities, or one of your core platforms in which you kind of funnel all of your activities, is undervalued shares. So tell me a bit about the kind of birth of that. Where did the germ of the idea come from, and how did you kind of put the pieces of that whole ecosystem together?
So I'm a big believer in writing down your ideas and testing them on an audience who can give you valuable and critical feedback. And as an investor, I always found that if you have a investment thesis that you want to put some money into, it's very worthwhile to write it all down and then put it out there and see what comes back. I'm doing that through my blog, undervaluedshares.com, which has by now grown into something much bigger than what I ever had in mind. It's got a global readership, and I'm publishing one extensive research report a month. I'm writing a free weekly article, which comes out every Friday, which is a good way to get to know me. And it's sort of a one-man publishing operation. It's a two-legged research operation. And the goal of Undervalued Shares is really to present ideas that you wouldn't come across elsewhere and teach you a bit more about financial markets. So with each article or each research report I publish, I try to not just present a good idea, but also make people understand in a bit more detail why I think it's a good idea, what the risks are, and how I came across it, so that other people can eventually benefit from, the experience I have in coming up with such ideas. And just as much you can just lean back and enjoy my articles and my research reports, and occasionally you'll find one or the other interesting gem among it, I'm sure.
Yeah, and let me first of all clarify that I'm in no way any kind of affiliate or have any commercial relationship, but the value for money of Undervalued Shares is breathtaking. I think an annual membership is something like $49, and a lifetime membership is below $1,000. And believe me, for the value you get from that, it's a complete no-brainer. And as I say, I just say that because of reading all this stuff myself. And in fact, just very topically, you've even found a way of playing the sudden interest in Greenland. What's the story going on in Greenland?
So one of the fascinating things I find in the stock market is that no matter what subject or theme you're looking at, there's always a listed company somewhere in the world that you can buy stock of to get exposure to that theme. And when Trump started to speak about Greenland at the end of last year, I had a look at, what listed companies are there that have some kind of exposure to Greenland. There are not many. Most of them are in some kind of gold mining or precious metal or diamond mining operation, and they're listed in London. And I also found one that's listed in Australia, which could potentially be producing massive amounts of rare earth minerals in Greenland. There's a whole interesting background story to this company, which I then, in great haste, because it was a story that gathered a lot of media attention suddenly, the whole Greenland subject, I wrote up all of these details about that particular company in a research report that went out to my lifetime subscribers, and by now it's actually freely available on my website. And that allowed my readers to basically, those who got in right away, they doubled or tripled their money within a couple of weeks because of that firestorm of media attention that Greenland suddenly attracted. It's a very volatile stock. It's a small company, so it's very speculative as well. But this was a great example for what you can find if you know where to look, and if you make the extra effort to sift through the details of sort of forgotten and overlooked companies.
Yeah, but I think part of this, and I know your reports go a long way to try and educate people and set the whole thing going. But if I recall, I glanced through it a couple of days ago. I think this is based on the outcome of a legal case, a little bit like the old Argentine YPF case a few years ago, where essentially they've limited this company from taking action, and they're claiming damages. And if they win, there'll be a multi-billion payout. Is my memory serving me correctly?
That's correct. And the interesting aspect here is, and this again, connects all of this to what Trump is attempting to do, or what he's put out there. This company had this particular rare earth project, but it was effectively expropriated by the Greenland government. It's not the technically correct term, but that's effectively what happened. And they've sued Greenland now, and the amount they're suing Greenland for is equivalent to 4 times the GDP of Greenland. If they won their lawsuit, that island nation would definitely be bankrupt. And at the same time, first of all, this provides an opening to have some serious conversations about settling outside of court. This may even be something that plays a role in conversations between, let's say, Greenland, Denmark, and the United States. And last but not least, the company actually says, we don't want to lead this lawsuit. We just want to be given the right to develop our mine, as we had always intended to do. And the company spent 15 years of preparing the mining operation. So they're not just, financial opportunists who are suing a small nation state. They are mining operators who just want to do what they legally agreed with Greenland in 2007. And they'd now be ready to execute that. So there are multiple potential outcomes here.
Yeah, and it's interesting because I'm assuming that must have been some kind of political decision, because economically, both for Greenland and the Western world, having access to those rare earth minerals and reducing dependence on China would just seem to be such an obvious good thing.
Yeah, it's a political thing that got out of hand. And as ever so often, one or two individuals really can make a difference in these things. And there was apparently one campaigner in Greenland who was just very, very successful at convincing her fellow residents of Greenland that this particular mine is not a good idea.
Hmm.
Fact of the matter is, Greenland doesn't have that many alternatives. The island, which is not even a country, it's a territory. It's basically a colonial territory of Denmark. It can't sustain itself. It relies heavily on handouts from Denmark. And if it ever wants to gain full independence, which is what the Greenlanders basically all want, then it needs to have some kind of economic activity going on. And that particular mine, which has seen massive investment already, which has been in the making for 15 years, that could be it. It could be an absolute game changer for the future, for the fate of the nation, so to speak. And it's very, very unfortunate what happened there politically. But I think, like elsewhere, some of the decisions that were done with regards to resources or energy were not particularly wise and maybe wound back, because you got to be realistic and things have to be paid for somehow. And Greenland only has so many options when it comes to economic development. So watch this space.
Yeah, and I think I shan't mention it's another Ireland story in the Lorenz portfolio, but I think what it does beg the question of, and obviously that's one example from the load that you actually uncover, but what about in terms of if we look at asset allocation here? And you know, I know we can't give advice, but on a generic level, let's say we had £1 million investment portfolio. How much would you think one should be looking at putting into these kind of opportunities that are always a little bit out there, a little bit strange, or you know, dependent on things, whatever? You know, if you were managing a portfolio, how much would you put into those kind of special situations that you do uncover?
So I have a good friend who recently summarized that in a conversation with me, and I'll just, repeat what he told me. So if you have a portfolio of 1 million, then 1% of that is 10,000. And this particular type of opportunity that I just described is very speculative. It could go up in value 10 times, 20 times, 50 times, maybe even 100 times, but it could also be a wipeout. And if you now think of this in portfolio management terms, if you put 1% of your fortune into such an investment, it could eventually become 10% of your portfolio, or 20%, or 50%, or even double the value of your portfolio, which is very significant. That is a massive step forward. Equally, if it's a complete wipeout, then you would have lost 1% of your net worth, which is not too bad. So I think that tells you something about position sizing for this particular, admittedly very, very speculative kind of investment. But it's very interesting because, I mean, how often in life do you have something that can go up in value, generally can go up in value 50 or 100 times? And that's the kind of home run that obviously everyone is looking for. And here is something that may just deliver that. Speculative, but it has a genuine chance.
Yeah, I mean, I've been saying the same thing about Bitcoin for some years, you know, and there's always been, you know, until recently, I think there has been a change of attitude. There was always resistance, and I always said, look, it's a completely asymmetric bet. You know, it could go to $1 million, it could go to zero, but you know, the answer is not to have zero exposure to it. There should be, even if it's 1 or 2%, which I see even the likes of Larry Fink talking about these days. Yeah, but if we said, okay, position size of 1%, but across, you know, how many positions in that £1 million portfolio would you think was you know, a sensible allocation?
I'm making the caveat, this is easier said than done. I would aim for putting 10% of your portfolio into 10 such opportunities for a start. I mean, there's so many factors here: age, overall portfolio size, what are your financial aims, etc., etc. It's very hard to give one advice that fits everyone. But I think it's not a bad idea to say, take 10% of your net worth and put it into investments that could make you advance in a very big way, but then spread it out among 10 investments. Should you spread it out among 20 or 30 investments? I think that's more than anyone could manage or even find. Just as much 2 or 3 is probably not diversified enough. So, about 10 different ones of these kinds, and many of them will be found in private markets. I think that's a good starting point for your considerations.
Indeed, yeah, we'll come on to that in a moment. And so, do you kind of just do loads and loads of online research, or do you have an army of scouts who are feeding these opportunities into you for you to analyze? Where do they all come from?
So two things are of great help. The first one is that I've been around for a while. I've been doing this for 30 years. So I just simply know a lot of stuff because I've looked at it at some point in the past.
Hmm.
That helps me to generate a lot more ideas than other people generally. And the other thing is that I now do have a bit of an army of informants because my readers, I always call them lovingly, I have a lot of weirdos among my readers, people who spend all day, every day looking at interesting investment ideas.
Hmm.
And I've always had the long-standing policy that every email I receive from someone I reply to personally, which then over time leads to you have a lot of people with whom you're occasionally in correspondence and who,
Hmm.
once or twice a year send you their best ideas. And I would say I have more ideas than I can even process because of all the good stuff that my readers are sending my way. And that makes my life a lot easier. So I am a two-legged one-man research operation, but with a lot of support staff somewhere out there.
And I think part of the way you seem to make it fun for everybody is that you also organize investor field trips, you organize dinners all over the place. I know my colleague Nick was at your London dinner last week. So you tell me about some of the trips you've done recently and some of the things you've discovered as you've taken investors with you on some of these jaunts.
So we've done two trips to Hungary and to Turkey, Istanbul, a while back, and we basically just contacted a lot of public companies and asked them, would you be willing to meet with us and give us a presentation about your company and why it's a worthwhile investment? And there's really two ways how to describe that. You could say that a lot of this is more entertainment than anything else, because ultimately what an investor relations staff member is allowed to present to you is all the stuff that you can read up on the website as well. That said, you do always come across some interesting intel that you pick up along the way, anecdotal evidence, conversations with other locals. And for example, in Hungary, we met at the end of the day with the staff of a law firm who gave us a lot of sort of behind the scenes kind of information about what's happening in Hungary.
Mm-hmm.
So we do come across the occasional gem, and these trips are worthwhile, but I'd say 50% of the value of these trips is meeting interesting people who are like-minded, seeing the rest of the world, having good food, having a bit of fun. I think there's nothing wrong with having that part of the equation as well.
Okay, and in the dinners themselves, I think that's where you sometimes present more of your ideas, and also, of course, you pulled it all together into an event that was, I suppose, very appropriately given your sense of humor. I think called the Weird Shit. Was it the conference or investment conference or something? And you
Yes.
presented, was it something like 16 different ideas? It was. I read the report afterwards. I heard great things about it from people that were there.
Yes. So I've long noticed that there's a real desire among my readers to meet other people who are like-minded and who live in the same region as well. Because if you're managing your own money, it's usually not that easy to find friends who are into the same kind of thing. And swapping ideas and testing your investment thesis on someone else who can give you critical feedback, that's always valuable. So I tend to invite readers to dinners where basically the rule is, first of all, everyone has to pay for their own dinner. It's not a marketing event. There's no sponsor involved or anything like that. We're all equals, and everyone has to pitch briefly and informally one investment idea that they really like. The dinners are usually 10 to 16 people. I found that is the right kind of table size to make sure everyone meets a bunch of new people, but it doesn't get too big. And then we just go around the table and speak about investment ideas and anything else that comes to our mind. And I'm sort of trying to chair the table a bit and make it, a bit of a curated, civilized discussion. And yeah, lots of friendships come out of that. People come repeatedly in the same city. I'm a bit of a bottleneck. I obviously can't organize that, that often. But I try to have at least half a dozen dinners a year. And this year I'll probably have a lot more. And out of that came the Weird Shit Investing Conference. So at one drinks do I organized for readers in New York, one very, very well-informed reader of mine who is specialized in litigation cases. He's a former lawyer, but he's a full-time investor now. he said, "Oh, Sven, you always look at all this weird shit. We should really have a conference for that." And thus the Weird Shit Investing Conference was born. I did the inaugural edition of that last year. Hosting a new or launching a new conference is never easy, because it's not like there's a lack of conferences in this world. So I said this is an experiment. And as part of the experiment, I will also make it bi-continental, as I said. We'll have it in London on Tuesday. The following day, I fly to New York. And on Thursday, we have it in New York, so that only the host has to travel, not all the participants. And yes, everyone had to present an idea that was weird in some way. And I basically gave a long list of potential categories for that on my website. It could be litigation cases or long forgotten dormant assets, stranded assets, or investments that are, almost legally prohibited, but through a loophole, you can still invest into them. Anything goes. It just needs to be unusual. And this year, because of the success that it was last year, I'm going to host it in Hong Kong, London, and New York, all in the space of 10 days. I'm going to travel with the sun, basically, starting in Hong Kong on Thursday and finishing in New York on Friday the following week. And very, very importantly, and I think that's probably the most relevant bit of information I can give you, yet again, everyone who presents has to provide a one-page summary of the idea, which then goes into a manual of weird shit investing ideas, which I publish at the end of the conferences and make available to the public at no cost, so that everyone, can get something out of it and can see what other people with crazy ideas are getting up to.
Fantastic. Okay, I look forward to that that three-part conference. But what I think is fascinating, given how, shall we say, left field a lot of this stuff is, you also have this role in the regulated world, running a fund in Guernsey. So tell me about how your involvement with creating and building Sarnia Asset Management came about, and what is the whole kind of investment thesis of the fund?
Yes. So as you said, I live in the Channel Islands. So when I decided to set up a regulated fund management business where we can actually manage other people's money, it was a natural conclusion to set it up in Guernsey, which is a great place also in terms of it's got just the right degree of regulation. It's not completely over-regulated, like, for example, the UK. Equally, it's not a Wild West market. So it sits nicely in the middle. It has common sense regulations that protects investors, but also gives you the freedom to create the kind of investment funds that investors of the kind that I know are asking for. And truth be told, it took us a lot longer to create the infrastructure for this company. So setting up a regulated new entity from scratch, if you haven't done that before, is not easy, and it's certainly not cheap. It took me well over 2 years, and we're soon going to launch our first investment fund. And that's basically a product for all those people who approach me, and it's quite a lot of them, who basically say, "Hey, Sven, I love reading your stuff, but I don't have time to actually execute trades and make decisions. Why don't you have a fund?" And much as I'm not going to be a full-time portfolio manager myself, the first fund that is coming out is managed by someone who I've known for 15 years. I work with very closely. I'm sitting on the board as well. So this is someone he's better at managing a portfolio than I am, and I'm actively involved. So you're getting the best of both worlds. So watch out for that fund to come out.
Okay, interesting. Yeah. Now, more recently, you've kind of joined me on the dark side by getting involved in this Maltese fund that's focused on venture capital and private equity. So tell me a bit more about your role there.
So I happen to know a lot of very active investors, some of whom have gotten quite wealthy over time. And this fund in Malta, I'm sitting on the board of, that's a non-executive position where I'm the independent director. It's a fund that was set up by a German tech billionaire he's now in his mid-40s, but I've known him since he was 19. And I play the role of independent director. So I can't claim any fame for having created that entity or for its investment track record, but I'm helping to oversee the assets, which is about €500 million.
Okay, and it seems to have a much more private markets focus, perhaps, than some of the other stuff you've done. Is that correct?
Absolutely. And this investor, who's the principal actor behind this fund, is someone who, on the one hand, he has done a lot in public markets, but I think really the majority of his fortune, to the degree I can, I really actually know details, but I think this would also be in the public domain. The majority of his billion fortune is from private market investments, venture capital, seeding new companies, investing into them very early on, and then raising money through IPOs at a later stage, and that was when he either simply raised external money to or to partially cash out as well. So in terms of private investments, that entity and that particular investor is certainly something to learn from, because as you will know better than anyone else, in private markets and in private investments, if you really want to do that leap ahead and advance to the next level, that's where many of these opportunities are hiding.
No, absolutely, and I think in a sense, you know what you've been doing in the public markets, I've been trying to do in the private ones, and I think it feels to me like we are coming up to a time of great opportunity. I think particularly if you look at what's been happening in America now. You're just back from California, where I see California is now so bad that even the homeless junkies have left, from the video you sent through. But what was your impression of what's happening in America, and what the opportunities might be as we head into this second Trump term?
Well, animal spirits have been unleashed. There's an amazing sense of optimism in the United States. Not that the place has ever been not optimistic. They're very different in that regard. But all I can say is the number of people I am seeing, I'm speaking with, who are intending to move to the United States or moving their company there or want to set up a company in the United States is extraordinary. There's something quite unique going on right now. And I think the second Trump term will be extraordinarily interesting for startup investments in the United States. As ever, there's another generation and another sector that is now coming onto its own, which is AI, it's defense tech. I think there's a lot happening in agri-tech that has become a bit forgotten of late. So the United States is the world's biggest economy. And if you're an entrepreneur, this is the place to be. Just as much, there's also so much competition for investments in private companies in the United States that there is, I think, a very strong case to be made for investing into European startups and private companies, because valuations are so much more attractive. And I mean, frankly, a country like the UK or Germany or France or even some of the smaller ones offer a large enough audience to build a pretty sizable business. So it's not like the US is the only interesting market to look at. Europe has its charm as well, and it's probably more accessible for us in terms of traveling, and also in terms of gaining a bit of an advantage over others by simply being on the ground and having a clear handle of the situation.
Yeah, I mean, what I'm seeing at the moment, I think it's been supported by some of the research I've been reading, is that private investors can and will play a bigger role in providing liquidity to European companies. Particularly, the statistic I saw was that only 4.5% of European founders are able to raise the growth equity to take them from the seed stage to the Series A stage. But that the growth over the next 5 years, something like 60% of the growth in that kind of investment is expected to come from high net worth individual private investors. So for me, this is obviously manna from heaven. This is very much my area. But I wonder if that's something that is a trend that you're keeping an eye on yourself in terms of your community and some of the investment opportunities that you're looking for.
Yes, I think the key trend to keep an eye on, and that's not going to change anytime soon, is that large corporations are becoming ever more bureaucratic and caught up in their own regulations. And I think as a startup investor, my first port of call for funding would always be high net worths who are making their own decisions, who are not under any restrictions, and who now exist in larger number than ever. I mean, this is really something that's changed a lot over the last 10 or 20 years. 20 years ago, you had to explain to people what the term family office meant. Now you've sort of got a family office every other, street corner, basically, and they may vary in size, and not every high net worth can write a check for $1 million, but if you've got, say, 10 high net worths who write a check for 100,000 each, you've raised $1 million. And I mean, that's an amount that for most startup funders is already quite significant. And increasingly, there are groups of high net worths who are pooling together, if only to swap information, you being the great example for that. So I think as a startup investor, that's the kind of potential investor I would very much focus on, rather than to try and speak to any kind of institutions, funds, corporations, because the decision-making processes there are just way, way too long.
Yeah, and some of the founders I've worked with have said, look, until you came along, we were spending 80% of our working week talking to institutions about investment and not getting anywhere. So it can be a huge distraction and time sink. But yeah, so a question I've been asking a lot of my guests recently is Donald Trump 2.0. Is he the savior of capitalism or a threat to democracy?
He looks to me much more like the savior of capitalism. I've always believed that. And I mean, I went to high school in New Jersey in the early 90s, and I've been following him ever since. He certainly does look to me like a threat to democracy. I think other people in the United States are a much bigger threat to democracy, but they didn't win the election. So I couldn't be happier, I have to say. I actually haven't told anyone yet, but I bought a ticket to see Trump speak in February, simply because once in my life I want to see him in real life, and I'm very excited about doing that.
Okay, whereabouts is that? Where's that happening?
That's going to be in Washington on the 22nd of February. Anyone can actually go. It's CPAC. It's the annual gathering of conservatives. And he speaks there every year. Ticket is $95 and anyone can buy it. You don't need to be a US citizen.
Fantastic. Okay, well, good luck with that. Now, one of the projects you briefly mentioned that's been very close to your heart is trying to revive the fortunes of the island of Sark. And I know you had a very ambitious plan about buying a whole bunch of real estate there, and we're spending a lot of time putting the funding together. But I think for one reason or another, the project's somewhat stalled at the moment. Is that correct?
Correct, yeah. Maybe briefly for everyone who doesn't know anything about Sark, it's worth mentioning Sark is a small island with 600 residents. It's about, I'd say, twice the size of Hyde Park, I think, or three times the size of Hyde Park. And it's a self-governing jurisdiction. Very oddly, with 600 people, we've got our own parliament, our own head of state, our own tax system, our own treasury. We're not getting money from anywhere else. We are, for all intents and purposes, a country, except for foreign policy and defense. The UK is taking care of that on behalf of SARC. And the island has had a lot of issues in the past, some of which, or possibly many of which, came from a conflict with the Barclay family, the Barclay twins, who need no introduction and who own not just a castle on an island off the coast of Sark, but who also bought up 20% of the main island. The Barclays have been in the media, rightly or wrongly, with lots of headlines about their financial issues, and I set out to raise the money to make them an offer for their 20% of Sark and to then subsequently buy another 20% of Sark, ideally, and go about redeveloping significant parts of the island in close collaboration with the head of state, who is one of the directors of the company I set up for this purpose. We did engage with the Crown as well. We engaged with the local community, with the media, with Guernsey as the neighboring island. So we did all that. I raised 20 million of equity for that and lined up 10 million of debt finance as well. So we had 30 million at our disposal, which I considered the value of that estate. Sadly, we couldn't come to an agreement on price, and possibly there are other issues standing in the way. If you read the newspaper headlines about the Barclay family, you can speculate about all sorts of things, which I'm not going to go into further. Bottom line, the deal hasn't happened. Could we revive it? Yes, if we wanted to. No problem at all. But right now we filed this away for the time being. We'll look at it again in 2026 and see where things stand.
Okay. So, but you actually do continue to live there. In fact, I think you're speaking to us from Sark today.
I am there right now. Yes, I'm at home.
Okay, cool. So how do you get around the island? Do you have is it a tractor or a horse or a bicycle?
So famously, Sark doesn't have cars and it doesn't have paved roads either. So I get around by bicycle, but I live on the edge of the village. As I always say, I live in the central business district. HSBC Bank is just next to me. So I don't have very far and I can also walk.
Excellent. Okay, so you've actually given a name to your community now, the poor millionaires. So where do you plan to take this organization? What's going to be the kind of characteristics of the poor millionaire group going forward?
Well, as we talk about all these things, more than ever, you make me realize that I need to delegate, which is exactly what I'm doing with Poor Millionaires. That's going to be a bit of a spin-off content platform that I'm creating. I've got a staff member for that, James Faulkner, who used to work with me for Master Investor. And we noticed that there are simply so many people out there who we jokingly and lovingly describe as the poor millionaires. They are somewhere between 2 million and 20 million, which makes you a millionaire, but you're not rich enough to really be, welcome, as I said, at the hedge funds or multifamily offices in Mayfair. So in a way, for example, in a city like San Francisco, it would now take $4 million to be counted as rich because life has become very expensive. So with 2 million, you may actually be a poor millionaire. We found that term stuck, and it really struck a chord with a lot of people. And we have now launched the beta version of a new website where we're going to publish content for poor millionaires anywhere in the world. There'll be articles, research reports, a podcast. You can register now and be informed about all the additions that we're doing to the website in the next couple of weeks and months. And it'll be purely dedicated to serving people like you and I and your following. And in a way where it's not going to be salesy. We're not going to, hard sell any products on there. It's really supposed to be a community. And luckily enough, we have the luxury of having a bit of funding to do that with a long-term perspective. And we'd love anyone who's, likes the sound of that to join us and also to give us feedback what they'd like to see on there, because this is a website by the poor millionaires for the poor millionaires.
Excellent. Okay, so finally, as we come to the end of our time together, Sven, there's so many things you've already done, but what else is on the kind of the plan or the bucket list for what we want to be doing over the next 5 years? If we were to get together in 2030, what kind of things would you hope to be talking about?
Well, short term, I'd say to do less and to just execute all the balls, all the projects that I've already got up and running. That's really priority number one. God, yeah, I feel like I've got a great portfolio now of things. I'm turning 50 in April, and all I just want to do is execute, and do more of the same and do it better and have a bigger audience. It's not more innovative or exciting than that.
Okay, well, I get the impression your profile has been massively increasing in the last 12 months, and I suspect it will continue to do so. So good luck in all your ventures, and thanks very much for joining us today, Sven.
This was a great conversation. Thank you so much, Graham.
Bye for now, folks. We'll see you again soon. Thanks for listening. If you're ready to start your own 8-figure journey, head across to 8figuremasterclass.com and sign up for the next free preview broadcast.